Hi, I'm ReAnn Gonzalez with Edge Home Finance. Today, I want to talk about something that causes a lot of confusion for home buyers and sometimes a lot of frustration too. A client will see a mortgage rate online and then ask, why is my rate different? That is a fair question. The truth is, the interest rate you see online is often not the full story. Mortgage pricing is not a one size fits all. The rate a person actually gets depends on several pieces of the file, and even small differences can change the pricing. Okay, so now let's get into it. Let's walk through why the rate you see online may not be the rate you get. First, rates depend on your credit score. And I want to be very clear here. We're talking about your mortgage credit score, not the score you may be seeing on your credit card statement or on Credit Karma. Those scores are often quite a bit different than a mortgage credit score. A lot of times, clients are surprised by that because they think the score they see online is the same score a mortgage lender uses. And that is most likely not the case. Mortgage lenders use a different scoring model, so if you are looking at a consumer score online, that may not be the score being used to price your home loan. That matters because two buyers looking at the exact same home may not get the same rate if one has a higher mortgage credit score than the other. In general, stronger credit can lead to better pricing, while lower scores may come with higher rates or higher costs. Second, rates can depend on your down payment. How much money you are putting down matters. A borrower putting 20% down may get different pricing than someone putting 3% or 5% down. Loan to value plays a role in how lenders price the loan. Third, the type of loan matters. A conventional loan, FHA loan, VA loan, and USDA loan are all priced differently. Even within conventional pricing, can vary based on whether the loan is for a primary residence, second home, or investment property. That brings me to another factor, occupancy. A home you plan to live in as your primary residence is often priced differently than a second home or an investment property. So, if someone online is advertising a rate, that quote may be based on a completely different type of borrower or property than yours. Another big reason rates look different is discount points. This is one of the biggest things people do not always realize. Sometimes the rate you see advertised online includes points. That means the borrower is paying money up front to buy the rate down. So yes, the rate may look lower, but it is not free. You may be comparing a rate with points to a rate with no points, and that is not apples to apples comparison. That is why I always tell clients, do not just ask what the rate is, ask what it costs to get that rate. Now, let's talk about why two buyers may get very different pricing. Even if they are both buying a primary residence, their pricing can still vary because of differences in mortgage credit score, debt ratios, down payment, loan size, property type, and loan program. One buyer may qualify for better terms because their file is stronger on paper. Another buyer may still be approved, but at a different rate or cost structure. This is why looking at random online rates can create unrealistic expectations. Those ads are often based on a very specific scenario, and sometimes the fine print matters more than the big number you see in the ad. And finally, I want to make this point very clearly. Rate is important, but payment and total strategy matter too. Sometimes the lowest rate is not automatically the best deal. You have to look at the full picture. What is the monthly payment? How much cash are you bringing in at closing? Are you paying points? How long do you plan to keep the home? Is it smarter to take a slightly higher rate with lower upfront costs? Or does it make sense to pay points because you plan to stay in the home for a long time? Those are the conversations that really matter. My job is not just to quote a rate. My job is to help you understand the options, compare the numbers, and choose the strategy that makes the most sense for your situation. So, if you're seeing rates online and wondering what is real for you, reach out to me. I would be happy to run your numbers and explain what your true options look like based on your mortgage credit score, down payment, loan type, and goals. I'm ReAnn Gonzalez with Edge Home Finance, and I'm always here to help.